This is Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asian chip makers bracing for losses after fresh sell-off in the US. With SK Hynix ADRs falling below their IPO price, pressure is building on big AI spenders to justify their investments. ASML shares slide on a report that China is mass-producing high-end chip-making tools, potentially threatening the Dutch firm's sales. And oil prices extend their drop as Middle East supply threats ease. President Trump saying there's a good chance of a new deal with Iran.
I'm Haidi, Stroud-Watts in Sydney. Take a look at the setup for trading in Asia. Shery mentioned a lot of cross-currents here and a lot of pressures to the downside, particularly if you take a look at the AI and chip-related trade. Right, as Shery mentioned, we saw that slide in ASML on that report that China's starting DUV tool production. We're also seeing that broad sort of malaise starting to hit when it comes to these IPO mega listings, right? SK Hynix slumping below its US IPO price. We also have seen the pressure when it comes to SpaceX as well, being now among the year's largest US offerings to trade below where the shares were sold for on the first day publicly. So make of that what you will in terms of the pressure that we could see when it comes to the Asia session. But broadly, it was that wobble with AI angst offsetting the declines we've seen in oil. When it comes to that broader Iran trade, though, it seems like the anxiety at this point at least had been set aside, given that we've had a few days of respite from this reignition of the re-escalation of this conflict, right? But futures are looking broadly lower across Asia. Brent crude also looking broadly lower, 8.7% of the last trade, and we see WTI off by 0.6%. So extending what has become a pretty steep drop after President Trump said the two sides are engaged in talks to end the conflict. Remember, we hadn't heard as to whether these talks were really even ongoing or not, but still, even this pause in strikes, the sort of ability to continue negotiating, not really creating that much upside for sentiment, Shery.
And still, Heidi, that oil relief really being overrun by the concerns around the AI trade. Nvidia's $750 billion web of AI deals, reviving concerns about circular financing across the industry. Bloomberg Intelligence Global Head of Technology Research Mandeep Singh joins me now. Mandeep, the fact that Nvidia is financing, guaranteeing, or investing in these companies, and then subsequently these companies buying Nvidia's products, how big is this risk?
I mean, look, vendor financing has been a concern from the very beginning when it comes to this AI infrastructure build out. And in this case, I think with OpenAI specifically, they were, exclusively working with Microsoft initially for the first couple of years. And now that they have gotten out of that exclusive agreement and they have their own ambitions when it comes to setting up these large data centers, they don't have the balance sheet like the hyperscalers do. So they're relying on someone like Nvidia for the backstop. Obviously, they'll be raising some of their own funding, given their revenue has ramped up nicely year to date. Same thing with Anthropic. And, both of them are looking to build their own data centers now rather than just rely on these big hyperscale cloud players. And that's where I think Nvidia gets to step in and really partner closely with someone like OpenAI and be that backstop, and OpenAI ends up buying more chips. So there is that circular aspect. But at the end of the day, these companies have the revenue to justify this kind of spend that they're making.
But Mandeep, even when it comes to that guarantee of OpenAI, does that signal bigger issues in the AI ecosystem, funding strains when it comes to this build out?
I mean, look, the numbers are getting very big now, and even NVIDIA's revenue is getting so big. For them to be able to sustain these kind of growth rates, they need, a lot of financing for their customers. And even, the US hyperscalers are going into negative free cash flow territory now. So because the numbers are getting so big, yes, it does give you that impression that it's getting harder and harder when it comes to financing some of these things. But we're talking about continuous monetization. That's why the ARRs of OpenAI and Anthropic have grown up so rapidly. And same thing with the Google results we saw last week. They saw their Google Cloud segment grow 82% in the latest quarter. A lot of that lift coming from AI, and we'll find out from Microsoft and the other hyperscalers how much of contribution they're getting from AI. So all in all, I think we are seeing ROI, but the numbers are getting so big that it's logical to be scared about these kind of risks.
What about for Nvidia itself? I mean, it had the worst day in almost 2 months. It's lost its status as the world's most valuable company to Apple right now. When it comes to any pause in the construction, when it comes to artificial intelligence infrastructure, what does it mean for Nvidia?
Yeah, I think with Nvidia, the real risk is how much are these ASICs, the non-GPU workloads going to take market share? And we know Google has been very successful with their TPUs. And both OpenAI and Anthropic are now working with Broadcom to make their own chips. So the visibility is still pretty good for Nvidia in the near to medium term. But if you look, 3-4 years out, they will have more competition on the inferencing side. And that's where they are trying to boost that open source, open weight ecosystem because they want model fragmentation. They want more players like OpenAI and Anthropic who are at the frontier so that they are not reliant on just 2 customers buying all their chips along with the hyperscalers. And the fragmentation really works well for them, and which is why they're so supportive of the open weight ecosystem.
So, Mandeep, when it comes to investors trying to distinguish genuine end demand, what are some of the metrics that you'll be watching in the AI ecosystem?
Yes, I think when it comes to token consumption, all of these companies give you some sort of a metric, and Google has been sharing that. And we are expecting Microsoft and, Amazon and Meta will talk about token consumption because right now that metric has been growing, 4 to 5x over the past 1 year, which is phenomenal growth. And that is what's translating into these sort of data center chip growths that we have seen. But if that tapers down, we want to know the slope of that tapering, because if it's a cliff sort of situation, then clearly, the risk gets magnified. But if that token consumption keeps up, then we know the chip demand is going to be strong because it's translating into tokens that, are being used for different kinds of workloads.
Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh there. And other major tech developments that we're following, ASML shares fell after a report that a Chinese state-backed company has started mass-producing DUV lithography machines. The report by tech publication The Information says the unnamed Shanghai-based firm is seeking to make about 5 DUV units this year and 20 next year. While the tools reportedly lag ASML's advanced systems, investors are closely watching China's efforts to build a domestic chip supply chain. Bloomberg sources say Nvidia is set to invest $5 billion in AI startup Safe Superintelligence. This will mark one of the chipmaker's biggest bets of the AI boom era. The startup, founded by former OpenAI chief scientist Ilya Sutskever, is focused on building advanced AI systems safely. The deal will also give the company access to Nvidia's next-generation Vera Rubin platform.
Well, Shery, Asian stocks, as we know, set for mostly a weak open. That sell-off in chip makers, some of the sort of existential concerns dragging this broad sector lower. But let's take a look at what else to expect. Garfield Reynolds, who leads our Markets Live Asia coverage. And there's quite a few ways to look at the sort of stumbling blocks for AI and for the chip makers at the moment, right? We spoke a little bit about the debt aspect, actually, yesterday, yes, which is interesting. But do you think there is a moment of kind of realization for how much froth there's been or how much enthusiasm there's been?
Well, very much so. I mean, it's the boom was extraordinary. So the fear is that the bust is going to be extraordinary as well. And we don't really have any clarity on whether this is a bust. But the apparent slowdown in expectations that AI profits would be massive and broad, that has been enough to create some panic for the investors who piled in, assuming that the 100% climb for the Kospi that we had year to date through the first half was going to keep on going. So if you have that, and you have, you're mentioning about credit, if you just look at what's gone on with interest rates, with bond yields and so on, and therefore credit yields, if you can get 5, 6, 7, 8% just by buying a relatively low risk, like an investment grade bond, then that has you fretting about whether you're so keen to bet big on further massive gains in the AI chipmaker space. Now we've got Chinese rivalry, we've got a history that people are starting to remember of SK Hynix and Samsung having boom-bust cycles before, where they were reluctant to expand and therefore prices got high, therefore they made lots of profits. Then they produce more, they produce too much, you get a glut, so you head back down. So we're possibly some way off from that, but all of these fears are swirling, exacerbated by things like the leveraged ETF situation, the Hynix ADRs, and for that matter, you mentioned the SpaceX IPO with it being back under its IPO price. That was nothing directly to do pretty much with Asia, but it's a marker for, okay, maybe this was the peak. And if it was the peak, maybe it's time to get out sooner rather than later, especially for those who are actually sitting on some hefty profits so far.
And also not helped by now these sort of renewed concerns that maybe we could get a surprise from the Fed or other central banks for that matter.
Yes, well, you mean that the very fact that you've got some talk of a surprise from the Fed, although by now you've got OAS contracts pricing in about a 40% chance of a hike, and even earlier this week it was 30%. So at that stage it's not so much a surprise, or certainly not a major surprise, but there's also been reporting that the BOJ could surprise with a hike or should surprise with a hike, and those swirling rumours, for the RBA for that matter, is now seen as about a 34% chance of a hike next month. All of that tells me that investors are deeply concerned that central banks are falling behind the curve on inflation again. So that's going to have an expectation that rates are going to go higher. And in fact, if they don't go higher rapidly enough, inflation could get out of control. And then, in the sort of the real world part of the curve, as it were, 5 years, 10 years, you get significantly higher yields on government bonds, taking everything else up, right as AI themes have been borrowing lots of money, no longer just using free cash flow. All of that is a potentially very toxic mix. So I think we've got a lot of investors across assets very much on edge about the risks to inflation and the risks to growth.
Garfield Reynolds, who leads our Markets Live Asia coverage, as we set up for potentially a pretty volatile trading session here in Asia. And still to come, of course, the oil story extending that steep drop. President Trump saying that the US and Iran are in talks on a new ceasefire deal. We'll get the latest next. This is Bloomberg.
They want to meet, and we're meeting. We'll see what happens. There's a chance we can make a deal. But without what we did, they wouldn't even be talking to us. They requested a meeting through their surrogates and directly. And we're meeting, and, good things can happen, I guess.
President Trump saying the US and Iran are once again engaged in diplomatic talks to end their conflict. Well, energy prices in the meantime have tumbled on these hopes that the pause in fighting will ease supply concerns. Iran and Oman also continuing talks on restarting shipping through the Strait of Hormuz. Let's get more from our senior White House reporter, Mika Solna. So, Mika, President Trump saying that he's optimistic that he's working towards a deal. We had a deal, right? And it fell apart. So how high is the level of expectation here that the two sides can come together with a deal that can be relied upon?
Yeah, Heidi, I mean, as we've seen, things are extremely fragile right now between the United States and Iran when it comes to this peace deal. I mean, we saw what happened and how quickly that initial deal fell apart. And so it seems like the White House is now going back to a diplomatic approach, but it's very unclear what's going to happen there. There's a very high stakes meeting tomorrow at the White House between President Trump and Israeli Prime Minister Benjamin Netanyahu. And we should expect to hear more out of that meeting and where things stand. We know that the Prime Minister is expected to press the president on holding strong on preventing getting a nuclear deal with Iran. So we're going to see what comes out of that.
Mika, how much pressure is there for President Trump to make a deal now? We know that we're sort of around 100 days less away from the midterms. There's a war that's both expensive and unpopular even within his own party, not to mention just the ongoing cost of living concerns with gas prices, right? Is he more likely to reach a compromise here?
Well, I think there's a significant amount of pressure. I think it's unclear whether that's actually going to fulfill a compromise. But yes, the president is grappling with these high gas prices and the market volatility that this war has played, but also just the exasperation among the public in a critical midterm year where Democrats are already feeling bullish. They have a very strong chance to flip the House, potentially the Senate. So Republicans are in a weakened position naturally due to historical trends. But I think that there are people, even Republicans, who are expressing that they're really frustrated by the prolonged operation in Iran and they want more answers here. So this is there's a lot of pressure on the administration right now.
There's a lot of interesting aspects to this, right? Because you've got top military commanders saying that the limit of effectiveness in these operations by the US has been reached. There's concerns about munitions stockpiles being depleted. We're also hearing reports that President Trump over the last few days, over the last week of attacks has really been driven by the anger over US fatalities. So how does that kind of bring together the likelihood of an off-ramp, I guess?
Yeah, I mean, I think that the president is going to do, whatever he can to try and end this war quickly. But as we've seen, that's been a lot more challenging. And I think that he anticipated in those around him who are at the negotiating table with Iran. I think that, there's a lot of concern with Capitol Hill Republicans, for example. We saw more Republicans last week kind of rebuke the President Trump, saying that, this operation needs to wind down. There has been no congressional authority on where they are. And we've also seen the president really escalate his rhetoric, threatening to commit potential war crimes. We've seen this before from him, of course. That's a tactic that he uses. But the rhetoric has shifted. And now it seems to be going back to kind of this more diplomatic effort.
Bloomberg government senior White House reporter Mika Solner, and just as Mika mentioned, with that diplomatic rhetoric, we're seeing also oil prices falling. But remember, Brent is still up 20% this month. So not surprising, we've been seeing commodity currencies doing pretty well. Yen-funded exposure to the Norwegian krona, to also the Australian dollar. Still, right now, it seems to be perhaps the last leg of this. We are seeing Australian inflation expectations cooling. The Japanese yen also holding at that 163 level, but we are seeing now prices continue to increase. And remember, we do have the Bank of Japan policy decision this week on Friday, so perhaps more expectations that the BOJ might need to hike faster. At the moment, though, we're seeing a pretty steady session when it comes to the currency markets. More ahead on the Asia trade. This is Bloomberg.
China says the U.S. has committed to cap replacement tariffs on Chinese goods at 20%, staking out a limit on further increases as President Trump moves to rebuild his protectionist wall. Let's bring our China correspondent Min Lo in Hong Kong. So what have we heard from Beijing in terms of a response on these latest U.S. tariffs?
I think Beijing has been acting with quite a fair bit of restraint so far. They have not yet imposed countermeasures to the latest 12.5% tariff, but the Commerce Ministry did release a statement indicating that the U.S. has previously agreed to cap those tariffs at 20%. So this seems to be giving the U.S. room to increase tariff even further from the current 12.5% after the latest probe into forced labor. This is something that the Chinese Commerce Ministry has hit back against, saying that they have comprehensive legal frameworks to combat forced labor. But bear in mind, the U.S. is also launching another probe into Chinese overcapacity that could further increase the tariffs even further. So China has said that it's going to continue monitoring the situation. The existing countermeasures against the first round of those fentanyl tariffs are still in place. But for now, it seems like the message here is that China is keen to stabilize those relations, especially ahead of President Xi's trip to the U.S.
It feels like at this point, the issue with Chinese AI firms, the accusations of model distillation, might be the bigger issue ahead of that leadership meeting, right? How strong has the rhetoric been from Beijing?
Certainly, this seems to be the more important issue here, and the tone from the Chinese Commerce Ministry is also stronger here as well, with China saying that it will take all necessary measures if the U.S. were to take actions to sanction some of these Chinese AI companies. And the Commerce Ministry did indicate that some of these Chinese AI models were released in close proximity to the U.S. AI models. And the subtext here is that it doesn't provide enough time for the Chinese AI models to distill or to copy from the U.S. models. And China has said that this is a smear campaign by the U.S. and also said that they are looking for AI talks. This is something that both sides are eyeing in September ahead of President Xi's trip. But China has said that this is a double standard being applied by the U.S., given that many U.S. companies are also distilling from Chinese AI models. This is according to the Chinese Commerce Ministry, even though they did not name and shame specific U.S. companies that are doing so.
Bloomberg Television's China correspondent Mingming Lo there with the latest when it comes to that battle for artificial intelligence supremacy. And of course, we've seen all of the volatility around AI, the investments, the concerns about circular deals. And you can see the incredible moves when it comes to SK Hynix. This is what's happening before the market opens in South Korea in 34 minutes. We had seen ADRs closing below the $149 July 9 offer price. Remember, this $26 billion debut was a record, but the stock has now joined SpaceX among the year's largest U.S. listings to now trade below its IPO price. We still have a lot of investment news, right, Heidi? Whether it's with Nvidia planning more than 2 gigawatts of Korean AI data centers, or even we heard from Chairman Choi Tae-won that Anthropic has asked SK Hynix about memory supplies as well.
Shery, the juggernaut when it comes to the massive amount of capex, even when you're talking about these circular deals, as you did a little bit earlier in conversation, right, it seems just absolutely unstoppable. The question is whether investors are going to kind of have to shift their mindset in terms of the renewed catalyst that they're looking for to try and justify this spend. But in the meantime, of course, the broader inflation picture is complicating that as well. What does it mean if we do start to see tightening from central banks, including the Fed? And all of this comes down to what happens with this war, right? Will there be a deal? Will the Strait of Hormuz resume normal operations? At the moment, crude markets are certainly hoping so, extending that decline. Funny sort of setup when it comes to these Asian markets for a Tuesday session. Of course, we do have in the backdrop potentially a little bit more progress being made on this de-escalation between the US and Iran. President Trump saying that he's feeling good at the potential of making a deal. But of course, we have to remind ourselves we had a ceasefire deal and that fell apart pretty quickly after the last time it was agreed upon. We're also hearing that Iran and Oman are also continuing with conversations about reopening the Strait of Hormuz. So if you take a look at oil markets, certainly that is the expectation. New York traded crude extending lows those losses. We're also seeing Brent, of course, in the previous session pulling back as well. So some of those expectations being built that perhaps we won't see a magnitude of energy crunch. We also have had some concerns over potentially building expectations of a Fed surprise hike, right? That's going to certainly complicate things as well. When it comes to broader equities, the Nikkei 225 down by 1.7%. US futures are flat at the moment, but the bigger picture at the moment is really to do with these risks over AI and tech, Shery. And there's a lot of cross currents going on there. We spoke a little bit about the circular economy, or circular deals, I should say. We've seen the likes of ASML, of course, falling in the overnight session. Just a lot of concern on how much money is being built in, and then the competition factor when it comes to AI from China as well, right?
I mean, you said it, Heidi. We're talking about Nvidia's a frenzy of deals right now. $500 billion of business with SK Group, SK Hynix in the overnight session. ADRs also falling and closing below its IPO price. We're talking about Nvidia also dealing with OpenAI, potential guarantees there, committing a reported $5 billion to safe superintelligence. We're talking about $1 billion of investments to South Korea neighbors as well. The point is financing, guaranteeing, investing in companies and projects that then also buy Nvidia's products. What are the risks around what people consider could potentially be circular deals? And then you mentioned the threat from China. If there's any breakthrough in China around deep ultraviolet lithography tools, for example, that could really threaten the dominance of ASML, which is why we saw that huge downside of more than 8%. Let's get more on what this could all mean for Asian tech names in Tuesday's session and bring in our markets reporter, Anthony Stevens, and Bloomberg's Asia Equities reporter, Charlotte Yang as well. Anthony, let me start with you and the significance of these advanced tools when it comes to ASML and what could potentially mean for the broader ecosystem.
Right. So deep ultraviolet technology is a foundational technology for AI and chip making in general. Even though the most extreme ultraviolet machines are not available to China, DUV makes up the mass majority of chip making. And that's why the impact to Korea has been so sharp in the next trade session already. DRAM and NAND is probably the first thing to get impacted if China is mass producing DUV. Now, there is not a lot of detail to the reporting. The reporting basically focuses on the fact that the mass production may happen in 2027, about 20 machines to be delivered. Now, it's important. It's an important aspect, this mass production, because China at the moment is very inefficient in its yields in producing chips because they use less complex machines for ultraviolet, amongst other things. But the more machines you have, the less that yield difference starts to matter. And China can ramp up production of NAND and DRAM to compete with Korea. So you saw that flow through in the US as well, with SanDisk down quite sharply. There are other impacted sectors that are likely to come online in Japan and Taiwan as well. Along the photonics side of things, the passive components, basically any chip that is less complex than a top-of-the-line HBM or GPU chip is now in play.
And Charlotte, to Anthony's point, we have seen Korean valuations becoming much cheaper. Give us a little bit of a backdrop and where we go from here.
Yeah, so Korea's Kospi index is now trading than less than 6 times of forward earnings. But this time around, you're seeing these cheap valuation levels are not enough to lure back retail money. So what we're seeing is that actually, those flows into the single stack leverage products tied to SK Hynix and Samsung, which have been known to retail investors love, their flows has been slowing over the past months. Retail investors are also deleveraging. So outstanding margin loans have also been steadily coming back since late June and now around the lowest level since April. So a lot of the retail investors we really hurt, over the past months as Kospi wiped out around, I think, $700 billion. So what they're doing now is more selling into it. When there is a rally, they sell into it, locking the profits, and also this broader sphere over AI spending and how durable that is. So all of these are not really helpful in bringing retail investors back. And the retail investors have been such a strong de-buying forces for Korean market, throughout this year. And so I think all of this, some investors saying that they're worried that this lack of this retail buying force, what we could see is that the Korean market could be sort of into a box region unless we do see more stronger buying from the global funds.
Charlotte, has that also been reflected in what's happening with SK Hynix?
Yeah, so SK Hynix shares is really struggling to pick up momentum again. So it's really quite staggering. In just in a month's time, the stock is down around 40% and wiping out nearly $500 billion. I think that's the largest among all the companies globally other than just SpaceX. So the next catalyst investors now turning to is the earnings results. But it's not just SK Hynix earnings results, because consensus is now expecting another record earnings season. But as we've seen with Samsung earlier, the prelim and also TSMC and others, record earnings, when people are worrying about like a peak season, that's not enough. So what's mattered more is what the mega US hyperscalers will be saying and reporting. We're talking about Meta and Apple. So the bigger fear now is that people are worrying about SK Hynix taking too much, or the memory taking too much of a pie, and how sustainable it is when SK Hynix is making over 80% of margin. So, and if that could reduce memory needs for those hyperscalers, and if they turn to cheaper alternatives such as CXMT. So all of these, the language and tones around those topics will be closely scrutinized by investors for this earnings week.
Anthony, is this just a continuation of something that you and I have talked about in the past, which is when it comes to the tech trade, we have to become more discerning. There's going to be winners and losers, especially when we're talking about hardware versus software, but even when it comes to these semiconductor equipment tools or anything that goes around the AI ecosystem. What will you be watching for the metrics of who actually goes forward in this race?
Absolutely right. And it was very interesting in the US to see headline indices trade about flat. And one of the reasons for that is the beneficiaries of cheaper chips from China or cheaper LLMs from China rallied quite sharply. So you saw Apple, Microsoft, Oracle, these names traded quite strongly and kept actually the S&P flat. Now that's going to be one theme that kind of percolates over global markets in the back half of the year. Now closer to home in Asia, it's important to note who has a moat and who doesn't. So whether HBM really is a moat that is resistant to Chinese interruption is going to be the biggest debate in Korean markets. And that speaks to what Charlotte was talking about, right? If there is a moat, then valuations matter. If there isn't, then valuations go back to being pure cyclical valuations, where Korea loses its premium and kind of the unwind is justified. So this technology interruption feeds back into clear financial metrics around whether valuations matter or not at these levels, and how do they get calculated going forward. What is a cyclical, what is a true structural demand AI story? That is going to be the determining factor of equity returns in the second half.
And Anthony, of course, this week is such a pivotal week, not only because we have big tech earnings, but also central bank decisions, not to mention whatever's happening around the Iran-US war at this point. What are you watching going on to Friday?
Well, luckily, we have a little bit of a tempering of the macroeconomic temperature, right? FX vol is low, fixed income vol is low. Yields are high objectively, but credit stress from the kind of treasury complex into IG and high yield is quite low. So we have that kind of relatively benign macro backdrop, but AI hyperscaler CDS is starting to worry people at the margin, whether this cash flow is actually, coming to the market and being able to pay back this debt is becoming an issue. Circular deals are becoming an issue as well as people look to move that debt off balance sheet. And then finally, you get this update from reporting season. So it all ties together quite nicely. By the end of the week, we'll have a very clear picture of what people expect for the back half of this year and the early part of 2027. But what remains to be seen is how fast is China innovating and how much of this innovation is real and deliverable and will disrupt the AI trade in the rest of the world.
Bloomberg Markets reporter Anthony Stevens and also Asia Equities reporter Charlotte Yang with us. And let's check on some of the stocks that we'll be watching when trade opens here in Japan. At the top of the next hour, Japan's chip complex will be in focus amid reports that China is starting to develop its own DUV machines. We saw Kioxia ADRs fall in the U.S. session, while suppliers directly related to manufacturing, including Renesas and Murata, also declined, Heidi.
Well, Shery, Microsoft's Executive Vice President for Security says that the recent AI-driven hack involving OpenAI and Hugging Face has been a wake-up call for the industry. Hayete Gallot told us exclusively how her company's agentic cybersecurity system named Project Perception aims to defend customers against machine speed attacks.
My evidence is take the headlines, take the most recent headline, sure, right, last week with Hugging Face. When you think about it, they were attacked by AI. and they had to defend using AI, and they had on the flow to adapt themselves and build security workflows to try to find what is happening in my environment. Unfortunately, this is an illustration of what's happening and what we're seeing through our threat intelligence across all customers. AI is happening at scale, and our customers need that real-time protection. That's why we're building this new stack. Today, you have a lot of signals, but signals are signals. Customers don't want more signals. They want protections.
Right.
And that's what we're trying to do with AI, is really arming them to be able to defend themselves.
I want to get into the Hugging Face OpenAI case study, but what I wanted to ask you is, what is the attack that you're braced for? Where is the attack coming from?
It's interesting because I'm glad you're asking this question. When you think about security, there is multiple vectors of attack. One that has been talked about a lot recently is software vulnerability.
Right.
And you've seen there was the big moment with Mythos and people talking about software vulnerability. This is a real vector of attack. And so if you think about AI, what it's done is you used to be able to find maybe this many vulnerability. And now, in no time, you can find thousands of them, which means this is increasing your surface area for attackers to go after you. So really now it's how do you help customers find those vulnerabilities before somebody can take advantage of it and fix them. So that's an example of a scenario right now that is really top of mind for every customer because it's a reality that they're facing and they're seeing themselves as they scan their code.
It puts vulnerability to AI into context because historically we might talk about a malicious actor being at the state level or a hacking group. You know, I know that's a less than sophisticated example, but now the point I'm getting to is it's genuinely now comes from AI.
It is now. Your point is really on target. With AI now, we've made it much more accessible to exploit vulnerabilities. And customers are seeing it, and that's why they're moving very fast with AI.
Microsoft Security Executive Vice President Hayete Gallot there speaking exclusively to Bloomberg Tech anchor Ed Ludlow. We do have more ahead here on the Asia Trade. This is Bloomberg. Take a look at what we're watching when it comes to energy markets, and we are seeing some calm being restored with oil extending that decline as President Trump says that the US is in talks with Iran to end the war on a new ceasefire deal. We're also hearing that Iran and Oman remain in talks to reopen the Strait of Hormuz as well. President Trump saying that there's a good chance of a deal given this ongoing pause. But if you take a look at the gains that we've already seen in July, Brent crude had soared 40% before the recent turnaround, if you recall. Prices are set for this month for one of the biggest monthly gains on record. This also, as we have sort of some divergent views when it comes to where this market goes next. Macquarie, for one, saying that oil markets could actually tilt back into oversupply before the end of the year as the US continues to face pressure over the end of the war and, of course, could see that quicker than expected resumption of oil flows from the Middle East and that stock building to begin. But at the moment, we don't have a great deal of progress other than a bit more optimism in the rhetoric that we're hearing from the US. Joining us now is Sara Vakhshouri, who's a founder and president at SVB Energy International. Sara, really great to have you with us. So difficult to try and understand where the oil market sits at the moment and where it's going from here, right? Because we know that the fundamentals of demand are not necessarily very strong, but the risks to supply are still very much skewed to the upside.
Yes, very much. As you mentioned, the risk is really high because there are so many uncertainty. On the demand side, there is a big question that how China could reduce its imports and domestic consumption to such level and maintain that for all these past months. And the question is whether China's economic growth is slowed down and has a slowdown. And again, it's not really clear that how much China's imports and consumptions are going to rebound in the future. So a big question when it comes to the demand. On a supply side, definitely the highest variable here is the Strait of Hormuz. Is it going to open or not? We have heard the headlines, positive headlines, that there is going to be a deal soon or happening. But as you mentioned, there was one that was just broke last week. So the market is really torn between two different factors here. One is the potential Gallot idea, those that they have it in the market, that if the Strait of Hormuz is open and the flow is going back to the normal, then the questions go back to where it was pre-war, which is OPEC plus supplies, inventories, and also doubts over global economic growth, and particularly China. However, on the other side, we have a huge uncertainty over the Strait of Hormuz. If the Strait of Hormuz doesn't open and flow of oil doesn't resume, then we're going to be in a very dire situation, because the inventories are also significantly low.
We've also seen the opening of another front when it comes to risk, right, in the Red Sea. And you talk about the uncertainty, and that's exactly why we've seen Asian buyers now engaging already in these pretty costly diversions of vessels to go through the Suez, for example, go through Africa. That's already underway. So how quickly is it to kind of undo that, or are the costs already built into this scenario?
Regarding how long, it's unfortunately, again, that's the uncertainty that it's there. No one is clear. And as you mentioned, yes, the threat over Strait of Hormuz has now extended to the Red Sea. Prior to that, we at least had the Red Sea option and Saudi East-West pipeline that was kind of very important for the global energy security during this crisis time. But that has now been challenged. So about how quick, no one really knows. Are we going to have a deal? This is a headline that we have heard that, and we've seen that the prices reacting to that over and over since the war has been broken in the past few months. So no one really knows, and we kept saying the volatility. It seems that the only certainty that we could agree all is the volatility could continue.
When it comes to Asia, we already saw during the first part of this war, right, before the first ceasefire, who the biggest winners and losers were. Do you expect that theme to continue ongoing in terms of the risks to certain economies?
Definitely, because obviously the certain regions are more dependent on the oil and energy resources and molecules that are passing through these choke points, both and from this region. Let's say comparing it with the United States, that has much less dependence. Also, all those inventories that IEA announced, the 400 million barrels, which already almost 300 million barrels of that has been released. They're all very regional, and they're very based in different countries. So yes, there are some economies that definitely are going to be more vulnerable toward this interruption.
Do you think this opens up opportunities when it comes to, we just talked a little bit about Saudi oil potentially going through the Suez Canal around Africa. Obviously, this is lengthier and more expensive, but does this kind of set up a new precedent for how some of these vessels might end up transporting even after the Strait of Hormuz resumes operations?
Definitely. So what we are expecting is that even on their hypothesis that there is a diplomatic solution to this war and everything, let's say, goes back to pre-war era. So still we think that there's going to be a lot of changes that are going to be sustained for the long period of time. One is the alternative route. So most of the producing countries in the region are already looking and trying to invest, plus the importers together, into alternative routes. So that alternative routes for circumventing the oil and energy molecules through other rerouting it through alternative routes is going to be something that the region will take it seriously, also the importers. So one thing is the alternative routes. The second thing is that alternative sources and alternative suppliers. So a lot of the importers are definitely going to look into speeding up the alternative sources as much as they can. For instance, you mentioned Asia. So could we would see perhaps the speeding up of EV application in these countries, or additional sources of energy to somehow diversify away from the sources that are these countries heavily dependent coming from Asia, particularly in the transportation sector. The third factor is alternative suppliers. So as we're looking in the medium term, there are going to be investment in alternative suppliers and sources of energy that are coming from different regions. So what would happen in all these, about all these sources that are already located? This region is hosting a huge source of energy. What we think is that we're going to see a lot of investment in reusing and adding the value chain within the region in order to using these resources instead of exporting them domestically in the region in those countries. So a lot of changes could be seen in the medium and long term.
Sara, really great to have you with us. Sara Vakhshouri, who's the founder and president at SVB Energy International. Do check out the Bloomberg Video Hub too. Subscribers can explore live streaming, news, interviews, all on our Bloomberg TV shows, documentaries, reporter analysis, and more. Do check that out. It's at bloomberg.com/videos. More ahead here on the Asia Trade. This is Bloomberg.
We're headed toward the market opens in Japan, and we're seeing Nikkei futures pointing to the downside of more than 2%. A complicated picture overnight as we saw oil easing. But anything related to the AI trade, very, very fragile. We saw the volatility overnight with that sell-off in the Philadelphia Semiconductor Index. Also news and reports that China is starting to develop its own DUV machines, potentially reordering the global semiconductor supply chain. Do keep an eye on Canon and Nikon. This is the last trade of ADRs overnight. But these two companies, together with ASML, are the primary suppliers of the deep ultraviolet lithography tools, which is a technology used to make less advanced chip layers. And we could see a little bit of volatility and impact given the reports coming from China. The market opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens with oil prices continuing to ease. Haidi, of course, we're seeing that pause when it comes to U.S. strikes against Iran. But still, when it comes to the AI trade, anything related to these mega deals, concerns about circular agreements leading to that sell-off in chip makers. We saw them at the lowest level since May, all in a week of crucial central bank decisions, including the FOMC and the BOJ.
The ferv has really gone out of some of these mega IPO deals, right? The likes of SK Hynix in the US, the likes of SpaceX, now kind of part of that cohort that are trading below their initial pricing. So that tells you something about sentiment. But as you mentioned, that broader macroeconomic story is a little bit uncertain too. You've even got some voices suggesting that we could see a surprise hike out of the Fed this week.
Yeah, perhaps no surprise here when it comes to the Bank of Japan, because the expectation right now is firmly for a hold, especially since we had that hike in June of 25 basis points to 1%. What we'll be watching in today's session as we see some downside both on the Nikkei and the topics will be the chip space, the supply chain space, because we have seen those reports that China may be starting to make those DUV tools. What that means when it comes to these lithography tools in the AI ecosystem and some of those rivals to ASML, a primary producer, but here in Japan also you have the likes of Canon, Nikon as well. We're seeing the Japanese yen holding at that mid 163 level, but remember we continue to see that weakness, which will have implications for the Bank of Japan. This Currency at a 40-year low against the U.S. dollar, not boding well for where central bankers will go from here, and criticism that it may be behind the curve. We have seen a little bit of support when it comes to the JGB side of things. Of course, oil prices easing, that's helping, but fiscal concerns still pretty rampant here in Japan. Take a look at how South Korea is trading because, of course, the AI supply chain, anything to do with these mega deals, especially Nvidia deals with SK Group, Samsung's deal with Broadcom, so many others that are affecting how the market here in South Korea is moving. You can see that big downside of more than 5% in the Kospi. Really not surprising. I mean, these 4 or 5% moves have almost become the norm in this very, very volatile market. The Korean won continuing to weaken around the 1,500 level. Samsung Electronics down more than 6%. And remember, SK Hynix also saw a lot of pressure. Heidi, as you alluded to, we're talking about SK Hynix now closing ADRs below its IPO price.
Shery, let's take a look at the broader story when it comes to Fed expectations, right? Because we did have that comment out from Citadel, really expecting the Fed to raise interest rates this week. It's a move that would really strengthen Chairman Walsh's credibility in the inflation battle, but that would be really a surprise for a part of the market if we do get that quarter-point increase on Wednesday. So that would really be something that we're watching out for. But in the meantime, you are seeing that move in treasuries rising. We see these elevated yields attracting buyers before that FOMC meeting as well, particularly as US pausing those strikes on Iran and oil prices continuing to fall as well. That auction of shortest dated notes attracting buyers ahead of the Fed meeting. When it comes to oil, we are seeing that extension of declines there as this kind of tepid optimism, or at least no more strikes for at least 3 days now. We've seen that sort of reprieve from the US, but also President Trump saying that there's a good chance that they could get another deal, that the US and Iran are engaged in talks at the moment, and that Oman and Iran are also in talks to try and reopen the Strait of Hormuz shipping as well. Macquarie even going so far to warn that a glut is likely to return before the end of the year, given that the US is under so much pressure. We are watching stocks here in Australia. We did see in the previous session posting the biggest gain since June 12th, but a little bit of pullback, particularly if we see that weakness in the energy sector in Asia play out, Shery.
Let's discuss all of this and bring in Brian Levitt, Chief Global Market Strategist at Invesco. Brian, let me start with you with the price of oil, because, of course, this has implications for inflation expectations around the world on the week. As I mentioned earlier, we have the FOMC, we have the BOJ as well. Do you expect the course of the U.S.-Iran war to have an impact on monetary policy going forward this year?
Well, I certainly hope that it doesn't. And the reason I say that is because what we're dealing with are supply disruptions. We're not dealing with demand-driven inflation. We don't have wages up substantially in the U.S. Shelter costs are coming down. So I don't want to see the Federal Reserve raising interest rates because there's volatility in the oil market. It's good news that oil prices have come down over the last couple of days. What I also think is very good news, if you look at the inflation expectations in the bond market, the tips break evens, they've been very contained. So the bond market is saying price stability. That's what I'm hoping that the Federal Reserve will be watching.
Any risk that the Fed might be tightening, perhaps not this week, but later in the year?
The good news on that side is that the market's already priced it in. So if you think back to the beginning of the year, the market was expecting 3 rate cuts, and now the market has adjusted to expect maybe 1 or 2 rate hikes. So that's a pretty big move. But what's important is that it has really happened without much incident in the credit markets or in the equity markets, both of which have performed very well. So the market is okay with it. To a certain point. So a hike, if we get one in September, is priced in this market. What I would caution is the Fed getting overly aggressively tight in an environment when, demand is not robust, and leading indicators of the U.S. economy, depending on which ones you're looking at, are suggesting a modest sign of a slowdown.
Is it too soon to be factoring in the artificial intelligence variable right now? Of course, the fact that it could have implications, whether or not we do get on a more benign path for inflation or we don't.
In the near term, there's some supply challenges, and that's really because demand has been so robust, which is a little bit ironic about some of the sell-off that we have seen in the AI space. So in the short term, you're going to have some price increases in certain places, but that's not broad-based inflation. That's very specific. Over time, yeah, I would expect artificial intelligence to be disinflationary. I stand with Fed Chair Kevin Warsh on that. You're likely to enter into a world of greater abundance where you can build more at cheaper costs and quickly. So, yes, I agree, although that may be more of an intermediate to longer term story.
In the meantime, when we're talking about how markets are perceiving this demand around the artificial intelligence and the build out, is the reaction that we're seeing with that sell-off on and off justified? Is this a structural change when it comes to trying to evaluate where AI goes from here, or is this just a recalibration?
Recalibration. I would not consider this a structural change. In fact, if you go back and you look at structural trends, or if you look at big investment themes in markets, they don't go straight up. There are always periods of reset. Those resets are healthy. In fact, if you look at the Magnificent Seven or you look at the hyperscalers, since 2022, this has happened 4 times. And each of the 4 times that the Magnificent Seven has broken below its 200-day moving average, it has bottomed and moved higher. And so that's very indicative of a structural bull story where the lows are higher and the highs are higher. So far, that's exactly what we are seeing. If you look at the earnings stories that we've seen, the demand has been incredibly robust. Now, markets have sold off into some of these very robust earnings stories, maybe out of concern of the type of investment that's coming in the future. But the reality is the demand is there. It is not investment that is being made by these so-called hyperscalers for chips or memory or data centers. It's not investment that's being made where the demand is not there. And if you think about what the future addressable market could be for AI, it is vast. So I would consider this a recalibration, not the end of a structural trend.
Are we seeing that trend towards broadening beyond mega caps, perhaps to some opportunities across Asia? I mean, I hear all the time that Japan could potentially be a good hedge given how broad the market is. But at the same time, the threats from this new technology emerging every day. Today, the whole news was around DUV tools that could affect the likes of Nikon, the likes of Canon as well.
Yeah, I would look into the broadening trade. In fact, if you've looked at the market this year, you've had a pretty good broadening trade. If you remember in 2024, the biggest question we got was what happens if these 7 names don't do well in the U.S. market? What does that mean for global markets? And those 7 names, the magnificent ones, have not done well this year, and the market is positive. And that's because you have seen a shift into other parts of the market, whether that's smaller cap U.S. stocks, whether that's emerging market stocks. So the broadening has happened. If you think about a lot of the major global indices, there's a lot of exposure to the parts of the market that stand to benefit from this significantly, whether it's financials, whether it's healthcare, whether it's industrials. So as long as the global economy continues to have some momentum, as long as the Federal Reserve doesn't jam on the brakes here, I would expect global growth to continue to be good, and I would expect the broadening trade to continue to work.
And Brian, before we let you go, of course, we have the BOJ policy decision on Friday. Given what you said about the Fed being still on an easing path instead of hiking rates, does that mean that potentially we could see a supported Japanese yen, which hasn't happened so far, if we see more divergence between these 2 central banks?
Yeah, that would be the view, and that was our view coming into the year. The Federal Reserve would gradually lower interest rates while the Bank of Japan would gradually raise interest rates. And yes, that would provide support to the Japanese yen. What's changed this year, of course, the war in Iran led to expectations of rate hikes. I don't think, given the inflation picture in the U.S., that's what we're getting. And so, yes, I would view that as the rate differential between the U.S. and Japan narrowing, which would be supportive of the Japanese yen.
Brian Levitt, really good to have you with us, Chief Global Market Strategist at Invesco, joining us today. Take a look at some of the big movers, and we mentioned tech with the fragility of the AI trade at the moment. A lot to do with really the concerns about circular deals, SK Hynix ADRs dropping below their IPO price, and you can see in the Korean session also plunging at the moment. Nvidia, SK Group planning more than 2 gigawatts of Korean AI data centers. We know that Samsung Electronics is also having a deal with Broadcom as well. We're watching tool makers, Canon, Nikon as well, given that we have heard reports coming out of China that the country is starting to develop its own DUV machines. And together with ASML, Japan's Nikon and Canon are the key producers of this technology. This is Bloomberg.
They want to meet, and we're meeting. We'll see what happens. There's a chance we can make a deal. Without what we did, they wouldn't even be talking to us. They requested a meeting through their surrogates and directly. And we're meeting, and, you know, good things can happen, I guess.
President Trump saying the US and Iran are once again engaged in diplomatic talks to end the conflict. Let's bring our Bloomberg editor, Michael Heath, joining us now. So, President Trump saying that he is optimistic of a deal. We had a deal. It fell apart pretty quickly.
Yeah, exactly, Heidi. And I mean, it sort of is this circular world, isn't it, where President Trump has said many times that talks are going on, deep talks, all these sorts of things. Iran has, the most recent comments they've made is that notes are being exchanged, but there's no actual negotiations, which has always been their position as well. So neither, you know, it could be that there are talks, and I guess the best example of that, or the best case for that, is that there's been no shooting between the two as such for 3 days now. What's sort of interesting is that there has definitely been talks that we know about between Oman and Iran, and the potential to perhaps find some way around getting the Strait of Hormuz reopened. Now, obviously, that was the trigger for the breakdown of that memorandum of understanding that the two sides had, and if there is some sort of fudge or some sort of solution for that, it would open the door potentially to then going ahead. But, you know, that seems to be the main impediment at this point.
We're also hearing, just reporting from Axios at the moment, that Israel, Lebanon and the US are expected to hold talks next week as well on expanding the process of Israeli military redeployment, I should say, in the southern part of Lebanon. These proxy tensions still remain key, don't they?
Yeah, they do. And look, I mean, the ideal would be that Hezbollah moves back, the Lebanese forces and the Lebanese government takes control of the areas that Israel has been in, that it says it must be in to keep Hezbollah out, and that, you know, peace can be secured on that border and Lebanon can be taken out of it. Now, Hezbollah obviously doesn't want that, you know, and there's a population that's quite sympathetic to them as well. Plus, you've got Iran that doesn't really want that as well. So, I mean, it's a multifaceted, myriad faces of this war kind of thing. But that would be really positive if it happens. But, you know, a lot of this has been said before, and it just, you know, until we sort of actually see it happen, that Lebanese forces go in there and they can keep Hezbollah out, it's sort of hard to pay it too much credence. I mean, it is important, though, that Prime Minister Netanyahu is due to meet with President Trump today as well. So that might have some interesting repercussions as well.
Yeah, particularly with some of the domestic criticism. I do wonder, you know, we've often talked about kind of the war of attrition benefiting Iran. They've obviously had a little bit more of a national resurgence following the state funerals. What would be happening there right now, that sort of effort to rebuild after the losses that they've suffered?
Well, it's going to be very difficult, Heidi, because, you know, the Memorandum of Understanding opened the door to a lot of money being available to Iran, and that's now cut off. And not only has Iran shut Hormuz, but the US has reimposed its blockade. So there's no funds going in there. So in a sense, they're in stasis, but it's just a I guess the debate within it, and we're a long way away here, but the debate within it is really between more pragmatists who want to do the deal, open the door to money and get some reconstruction going and try and get the country back on its feet, and the hardliners who are like, well, we've sort of got the world superpower on the ropes here a little bit, we're creating trouble for it. Let's keep pressing it. Let's make it back down further. They got a very good deal, frankly, there, but I guess they suspect they can get more, those guys.
Michael Heath, our Bloomberg editor there with the latest on the conflict in Iran. Let's turn our focus to the energy markets. As Middle East supply threats ease, we're seeing Brent trading below the $90 a barrel level. But of course, you have to put it into context because Brent is still up about 20% this month alone. We are now seeing loading resuming at a terminal on Russia's Black Sea coast. Let's discuss with oil reporter Nicholas Law. Nick, what's the situation right now when it comes to Kazakh crude? Of course, we have different waterways right now that we're watching.
So actually, two tankers chartered by Chevron have actually started loading at the Caspian pipeline. So that's the major pipeline by which Kazakhstan exports its oil to global markets. Another thing to flag, of course, is that shortly after these loadings happened, Kazakhstan itself came out to say that as a result, companies pumping that oil are able to continue delivering into the pipeline. So I think what's clear is that if we went into the weekend with this sense that the war was being, oil markets were being assaulted on three fronts, Iran, Ukraine, and now Kazakhstan, it seems that at least one of those is starting to ease up.
What about the Red Sea front with Saudi oil?
I think that one is still a bit of a hit and miss. So at the moment, we're seeing tankers that have been able to identify themselves as perhaps not so hostile to the Houthis or not so hostile to Iran. So these are the ships that are saying, oh, we're Chinese owned, we have Chinese crews. Those we've seen have been able to pass the Bab el-Mandeb choke point. Other ships with closer ties to the Saudis, and again, the Houthis, of course, declaring their maritime blockade on the Saudis, right, have had to reroute and go by Suez. And of course, many of these oil cargoes are ultimately destined for Asia, the world's largest buyer of oil. And if this redirection just means that supplies that were thought to be able to arrive on schedule are now being disrupted, adding 15 to 30 days to the journey, right? And what this means is that here in Asia, people already nervous about the fuel situation will have to find refiners would be turning to cargoes from elsewhere in order to make up the shortfall. So again, not as bad as we were going into the weekend, but not exactly a peace deal either.
Especially given that we still have a lot of conflict around the Strait of Hormuz, right? What would a joint management situation that Tehran wants to see with Oman at the end of these negotiations actually mean for the rest of the world? And where are we? You alluded a little bit to Asian supplies. What are we in terms of physical supplies and reserves?
So I'll say that first and foremost, in terms of resuming shipping through the Strait of Hormuz, I think talk is around resuming passage through that middle strait, right? So again, earlier in the war, even up to now, I think people either go by one of the other two routes, right? Those closer to Tehran choosing to go around closer to its islands, the others going by Musandam with US military support around the Omani route. So I think that's one thing we need to see, right? Reopening of a middle route would suggest that some kind of literal middle way is being approached in terms of negotiations. But again, all that's still very tentative, right? So I think just in terms of supplies, looking here in Asia, I think one thing to recognize, of course, is that the fuel markets are not as tight as they are elsewhere in the world. I think Europe and the US are facing a much tighter fuel situation. But again, because Asia is the home to most of the world's fuel consumers, any sense of feast can quickly turn to famine. I think that's one thing that people are watching for.
Nicholas Law, Bloomberg oil reporter, with the situation on the ground when it comes to those oil supplies. We have more ahead on the Asia trade. You're watching Bloomberg. Bank Indonesia is seeking to reassure markets that it will continue to prioritize currency stability after the sudden departure of Governor Peri Warjiyo. Investors had viewed him as a stabilizing force in an economy jolted by President Prabowo's policies. Bloomberg's Avril Hong joins us now with more. And Avril, we have seen the volatility on the rupiah already this year. So what more can Bank Indonesia do now to soothe markets?
Yeah, so far what we're hearing are these comments from the acting governor, Destri Damawanti, and she's talking about how they are prioritizing rupiah stability. They'll remain active in the spot, NDF, domestic NDF FX markets. They're saying that the policy stance remains unchanged, but to your point, I suppose, given how these comments follow a meeting from the Financial System Stability Committee along with the President Prabowo Subianto, there's still the lingering uncertainty about who the permanent appointment for Bank Indonesia governor might be. This is something that the meeting did not address, and she is someone that's seen as a safe pair of hands. She's known by investors as someone that's been senior deputy governor since 2019. She's overseen these financial markets along with monetary operations. But, as you alluded to, this is coming at the time where Indonesia has already lost two very prominent figures that are known to the finance community. Of course, this is following on from the resignation of Peri Warjiyo, the governor, and along with the finance minister, Sri Mulyani Indrawati. So investors are going to be watching for any signs of possible changes of a less independent central bank here.
Yeah, what's been the reaction so far when it comes to analysts on what the potential market impact could be from this change in leadership at BI?
Yeah, as our colleagues at Bloomberg Economics very astutely pointed out, if you look at the statement that Bank Indonesia released yesterday, there was no mention of price stability as an objective or bringing inflation within the 1.5% to 3.5% corridor. And these are things that typically get quite high-profile mentions in previous Bank Indonesia statements. And this is coming at the time where, of course, the central bank has been under pressure from the Prabowo administration to align more closely with the government's growth agenda. And you may recall back in June, some of its objectives were expanded to include supporting the real sector growth. And then Parliament was also given powers to evaluate the central bank's performance. And we've already been seeing this year how the likes of Moody's and Fitch, they lowered the rating outlook for the country to negative from stable. So going forward, all these issues on, whether central bank independence remains intact will be something for investors to assess.
Bloomberg's Avril Hong there with the latest on Indonesia. We're also watching some trade news. China now saying that the U.S. has capped replacement tariffs on Chinese goods at 20%, revealing details of recent trade talks for the first time. A Commerce Ministry statement notes that the current replacement tariff stands at 12.5%. This is Bloomberg.
Take a look at the downside that we're continuing to see when it comes to these Asian markets trading with the pressure of the sell-off in chip makers. The questions mirrored there are over the sustainability of this AI and memory chip related rally that we've seen over the past few months. We've seen really broadly that decline when it comes to Asian stocks, but the steepest, of course, being felt in these chip sensitive markets like the Kospi, down by close to 7% there. We did see SK Hynix, the US listed name, really falling below its IPO price, joining the likes of SpaceX. So some of the enthusiasm coming out of these mega listings as well. Here in Australia, really limiting those losses. There is a view that going into earnings season, potentially won't see earnings outperformance necessarily for Aussie stocks, but that there will be stability. So perhaps there is also an opportunity to kind of hide in Australian equities, given that we did see in the Monday session posting the biggest gain since about June 12th there. Some of those energy names dragging the broader sector lower today. But let's get the details now on a report that a Chinese state-backed company has begun mass-producing DUV lithography machines for high-end chip making. Let's get to Hong Kong, bringing our China correspondent Min Min Lo, as well as our markets reporter Anthony Stevens. So Min Min, let's start off with you. What do we know about this?
Yes, this is according to the Information's reporting, and they are reporting based on what sources are telling them. And it looks like China is making headway in creating, in mass producing these DUV machines, deep ultraviolet machines, which are used to etch patterns of transistors on these silicon wafers. And it's a Shanghai-based startup that has managed to gather expertise from other Chinese companies, including a state-backed Chinese firm. And they are planning to make 5 of these machines this year and 20 next year. So this is critical because ASML has so far been dominating the industry, but what is important to note is that these DUV machines, they are less advanced than the EUV or extreme ultraviolet machines. That is the top of the range machines that US has prevented ASML from selling to China. ASML is also not allowed to sell the most advanced DUV machines as well. But important to note again that the majority of chips now rely heavily on DUVs. Only a small sliver of the most advanced chips require the EUV machine. So this is still an important breakthrough from the Chinese side, and that is why we're seeing the market impact here, especially on ASML, which saw big declines yesterday in the US session.
Yeah, to the lowest level since early June. So, Anthony, the implications, though, are not just for ASML. We're talking about Asian peers and just a broader AI ecosystem as well.
Yeah, this fundamentally alters the valuation picture and how people look at the AI trade, right? If China can make a whole range of these chips except for the absolute top end of the line, a lot of chips go back to cyclical valuations and have to be looked at cyclically. That's why you're seeing this huge impact in Korea and Japan today on passive components, on packaging names, on NAND. These are the more basic chips that were being treated as a structural demand story for much of the year and have sold off very sharply, first on China's innovations on LLM side to use resources more efficiently, but now another leg lower on China's ability to produce them in the first place. So demand and supply are both being disrupted by China at the same time for these components. Now, this is coming at a very sensitive time in positioning. Korea is off almost 30% from the highs, and as local retail has bought almost $100 billion from foreigners, this is very deep waters they are swimming in as far as risk management is concerned. Now, the fundamentals for Korea is actually a little bit more relaxed. You cannot make HBM without EUV, but for now, the positioning and the change of valuation is what is driving markets here.
You know, Mimin, I'm also looking at the story on CXMT, the listing creating a $190 billion windfall for Anhui profits in China. So it just illustrates how key these national champions, the AI strategy, is to the broader government sort of ambition and the broader economic prospects in general, right? So how does this fit into how these AI talks are going to go with China and the US and potentially this visit by Xi to the US?
Yeah, this is certainly one of the key sticking points between US and China right now, because the US has been accusing Chinese AI models of distillation and accusing Chinese AI companies of IP theft as well. And this comes as Kimi K3, or rather Moonshot AI, has just released the weights of Kimi K3. And we saw this 6-fold surge in sales for Moonshot AI since the launch of that new model. So certainly this is something that would really could potentially derail those talks, but for now, both sides seem very keen to ensure that nothing would derail President Xi's visit to the U.S. Both sides are eyeing those AI talks in September. And of course, the launch of Kimi K3 at this time is still, the monetization side of things is still challenging, right? Because it really depends on these hyperscalers, these cloud AI providers to host the technology for developers. And so far, we had seen Chinese companies like Alibaba, like Huawei, they will be able to benefit, but the US hyperscalers like Amazon, like Microsoft, they so far have not been hosting any of these Chinese AI models. So this is going to be a challenge for broader usage of these Chinese AI models, especially in the US.
We have seen some resilience for the Chinese tech sector recently. Anthony, when it comes to really comparing this sector in China to the rest of Asia, how do they stack up? On a day like today, when you're seeing the Kospi, the Nikkei all falling because of this chip sell-off, Kioxia even down in the double digits.
Yeah, I do think it's an interesting dynamic how CXMT traded yesterday, right? You had that huge liquidity pull, but it's still Chinex and HS Tech ended up. And one of the things that's happening here is the windfall from CXMT into the Chinese retail base gives them the risk appetite to play the rest of the AI space. And today you have some of the technological progress to back that. So you might have this kind of virtuous cycle of stock winnings meeting Chinese technological progress to support the HS Tech and the Chinex. Now, within those sectors, there is a lot of dispersion. So the HS Tech has a lot of EV exposure, which is probably not exposed to this theme, but you had stocks like Minimax, for example, doing very well, double-digit gains, Zhepu, Tencent. These are consumers of Chinese tech that will be, Chinese chips that will be relatively happy to see this news. And on the side of the Chinex, you have the optical names and the memory names and the passive component names that would really be welcoming more capacity in the DUV space. So Chinex today and HS Tech today is set up for much better leads than the equivalent Korea, Japan names. But we do face this problem now of oversupply in some of these spaces. So it really remains to be seen how this gets differentiated as time gets passed.
Yeah, Min, are we going to see some differentiation on the Chinese economy as well as we see this K-shaped recovery where you focus on tech, but the rest of the property sector, the rest of industrial profits do not necessarily keep up?
Yeah, certainly we are seeing this bifurcation in the Chinese economy, right? And the government is leaning heavily, hoping that tech will be able to pull up the economy. We had seen, if you look at the economic data, exports remaining the bright spot here and largely being lifted by the export of these semiconductors, chip components, printed circuit breakers, for example. But again, you look at consumption in China, retail sales and consumer sentiment still remaining pretty weak here, even though, yes, of course, with the Middle East war dragging on, the inflation coming back to China, it seems like the government is not too urgent about creating more stimulus and is still hoping that at least the tech and the manufacturing sector will be able to offset some of the softness when it comes to retail sales.
Bloomberg's China correspondent Min Lo there, together with markets reporter Anthony Stevens joining us from Hong Kong. We have more ahead. You're watching Bloomberg.
Australia's resources sector is in the spotlight, with Rio Tinto set to release half-year results on Wednesday ahead of reports from BHP, Fortescue next month. Bloomberg Intelligence thinks that gains in copper and aluminium prices may drive a lift in Rio's earnings. Let's bring Bloomberg's metals and mining reporter Paul Alan Hunt for more. So what have we learned when it comes to some of the operations report from the big miners ahead of these earnings?
So yeah, you're right. We've just come out of the quarterly season, I guess, and for the two major miners, BHP and Rio Tinto, something that really stood out was a decline in copper production, quarter on quarter, and compared to the previous year. Looking at those two companies in particular, BHP had warned maybe 2 years ago that production from its key Chilean copper portfolio was starting to decline and would decline for many years, because the grade of ore that they're mining has fallen. It seems like it took investors a little bit by shock. Perhaps they just needed a reminder that this was happening in Chile. But it really does bring home, how these two major miners, with their focus on copper, are trying to boost production or maintain production. And it's coming with a huge spend. The other thing that was interesting to take away was the resilience of iron ore. So iron ore, the cash cow that accounts for, has traditionally accounted for the majority of both BHP and Rio Tinto's earnings and profits, and is sort of fueling their move to diversify and grow their copper portfolios. The iron ore price has remained relatively stable over the last 6 months, and that's despite negotiations with China Resource state buyer.
We've also got the world's second biggest miner earnings, of course, tomorrow. When it comes to Rio specifically, what are you looking for out of that half yearly?
Well, I think we can expect possibly an uptick. That's at least what analysts are saying in profits. And that's based on commodity prices. I mean, one of Rio's biggest commodities is aluminium, and we've seen significant price hikes due to the US-Iran war. There also that resilience, as I mentioned, in iron ore, and a much higher copper price too. We are going to also be looking at Rio Tinto's growth options in copper. That is one of their key pillars in terms of growth. But other than Oyu Tolgoi, one of their major mines in Mongolia, there isn't much there in terms of the near term. And copper mines take, 7 years to develop from scratch. So that does bring into question, things like M&A. That's certainly something that we'll be looking at. Of course, Rio earlier this year held talks with Glencore, and that's something that we'd be interested in seeing whether that remains on the table or not. It's obviously too early to say. And of course, strategy, Rio Tinto's strategy to divest non-core assets, things like infrastructure, and its restructure internally. It had a huge headcount. It'll be interesting to see those numbers tomorrow.
Bloomberg's metals and mining reporter Paul Alan Hunt there joining us from Melbourne. Let's get some more analysis with Grant Spohr, who's a mining and commodities analyst at Bloomberg Intelligence. And Grant, we were just talking with Paul Alan about the dynamic for the copper market, right? It's quite an interesting one because I wouldn't say, consistently that we're seeing risk-free for the global economy, but at the same time that's perhaps being balanced out by tightness in the market.
Yeah, undoubtedly. So copper has been, I'd say, despite all the potential risks to global growth, copper prices have been very, very strong over the past 6 months and have held consistently above $13,000 a ton. I think fundamentally, if you look at supply to demand fundamentals, the market looks perhaps balanced to, if now maybe slightly oversupplied, but it's still a very, very tight market. And as Paul alluded to, one of the key things that's holding it or keeping it elevated is the supply side. I mean, that has been, the miners have struggled to deliver new tons. And indeed, the industry is still recovering from a couple of, serious setbacks that it had last year. And those tons, those mines like Grasberg haven't returned to full production. And that's keeping the mine supply pretty tight. So we're lucky to see if we're going to see any growth in mine supply across the sector at all this year. It's likely to be flat to maybe 0.5% up if we're lucky. So that's certainly one of the aspects that's keeping the market tight.
So you're focused more on the gains as a result of copper or of aluminium as well when it comes to these Rio Tinto numbers that we're expecting. What's the dynamic going to be, and do you expect that strength to be able to be maintained?
The strength of the aluminium price does more or less depend on how the trajectory of the US-Iran war continues. So, if we get a resolution and it sticks, then aluminium prices may come under a little bit of pressure in the second half of the year, partly because, that opens up the Straits of Hormuz and we can get raw materials in, and the Gulf smelters start to ramp back up again. If it drags on, then the price of aluminium is sustainable and at a higher level than we have seen. I would add, though, that we have seen a supply response from other parts of the world. So China has exported a lot more in the form of semi-fabricated goods, as well as some places like India and Indonesia are ramping up production. And, that is starting to tell on the market. So the market will balance itself despite risks to the Gulf. So I'd say aluminium, yes. So in the short term, it does really depend on the trajectory of the war. Copper, certainly, I think the current price is sustainable, around about 13,000 tons. Again, if the war does drag on and we do start to see rate hikes and we do start to see a big drag on global growth, which up to now we haven't really noticed too much, then that may be a risk to copper prices. But if we do get a sort of a resolution and it's the Straits of Hormuz open up, then I think certainly copper is looking well underpinned at these levels.
So there's a war impact. There's also the China impact, right? As we continue to see steel mill stockpiles climbing, there's a clear bifurcation when it comes to the K-shaped recovery in the Chinese economy at the moment. How's that playing out when it comes to demand for iron ore?
Well, I think there's been quite a lot of, in terms of the demand for iron ore. If we look at the Chinese steel market, sure, it looks as though demand certainly on the construction side of the economy is weaker, but that has the Chinese production has found a home in exports, and whilst we and a lot of the market were expecting a bit of a slowdown in Chinese steel exports. That hasn't really materialized. So the demand for iron ore in China is still being particularly strong. Imports are still very, very good. So in terms of demand, we're not seeing a major pullback in terms of iron ore demand. And that keeps it reasonably well supported at about $100 a ton. There's also a cost support there as well. There's quite a lot of cost-sensitive producers that, whenever the price drops below $100 a ton for any length of time, a lot of those producers start to pull back from the market. And that just seems to be quite a good cost support level, both with internally in China and the sort of smaller producers, obviously not the majors who have a much better cost structure, start to pull back. And we've seen that time and time again, and that's one of the reasons why iron ore prices have sort of keep on surprising on the upside and have been particularly resilient.
As we get those BHP numbers as well as Rio this week and going into next month as well, what are your expectations when it comes to commentary around M&A, right? Obviously, we had BHP walking away from Anglo again, was sort of the large major development. Has that interest been quite tepid for this cycle?
So look, along with cost control, cash conversion, capital allocation is going to be a key focus in these upcoming results. And with that, the discussion around M&A is going to be, is going to surface again. Look, I suspect the miners or BHP and Rio, are really focused on prioritizing copper. It's a primary growth driver across the sector. So they're going to prioritize it as their key strategic focus. I think, though, that the challenge is to find, targets where the valuations are compelling, and I think both in Rio's experience with Glencore and indeed BHP's experience with Anglo American, valuation was probably a key sticking point. And I don't see that actually disappearing. So I think valuations for the major miners in terms of conducting M&A is always going to be a challenge. And we've seen BHP sort of talk about their sort of project pipeline, one to maintain or at least to restore output at Escondida, one of their biggest mine. So that's going to be, I think, a key focus for BHP. And as Paul alluded to earlier, Rio does need a bit more of a medium-term copper growth story. It's ramping up Oyu Tolgoi, which is doing very, very well, and that still has some runway they still have some runway ahead of them to lift output. But over the medium term, they do need perhaps potentially some more developed copper growth options.
Grant, really great to have you with us. Grant Spohr, mining and commodities analyst at Bloomberg Intelligence. We do have more on Australia ahead every Tuesday at 10:40 a.m. if you're watching in Sydney, 8:40 a.m. if you're catching us out of Hong Kong. You could also tune into the Bloomberg Australia podcast. You can find that on Apple, Spotify or Bloomberg.com. This is Bloomberg.
Anything related to chips, the AI trade under pressure in today's session. Take a look at Japan and Kioxia losing more than 18%, down about 60% from its peak. And we're talking about anything in the chip complex on reports that China is starting to develop its own DUV machines. Together with ASML, you're watching Canon, you're watching the likes of Nikon that provide these deep ultraviolet lithography tools, which are technology used for less advanced chip layers. In South Korea, watch SK Hynix, Samsung, anything related to concerns around circular deals. Haidi, of course, we have seen SK Hynix ADRs close below the $149 July 9th IPO price, but we do have those investments together with Nvidia, that initiative from SK, that AI initiative topping $500 billion, leading to more concerns that all of these investments, Nvidia buying their own products, could actually lead to more risk.
This is what we're watching when it comes to this part of the market, right? We could see the beneficiaries of what we're seeing, the downside in markets like Japan and Korea and in the US. But watch for Chinese chip and semiconductor equipment related stocks. They could see actually advances. That media report saying that the country has begun manufacturing its domestic immersion DUV lithography systems. That local substitution theme remains very resilient there. So watching for sort of the other half of that reaction as we saw the decline in the likes of ASML in Amsterdam, 8.4% lower there. The beneficiaries could take place in China. Also watching Taiwan as well, with the monitoring indicator rising to that boom territory. This is Bloomberg.